Texas was always painted as the safe bet. For decades, people called it the promised land of no state income tax, affordable, wide open spaces, and booming job markets that seemed impossible to slow down. Families moved here chasing the American dream. Investors poured money into subdivisions that seemed like they would never stop growing. The narrative was simple: Texas real estate was unstoppable. But in 2025, that comforting myth is shattering before our very eyes. From the glass towers of Austin that once symbolized tech prosperity, to the sprawling suburbs of Dallas where families fought bidding wars just a few years ago, the Lone Star State is witnessing one of its harshest real estate reversals in history. And the shift isn't small, it's deep, it's painful, and it's reshaping communities across the map. Not every city is built to survive what's unfolding. Inventories are swelling to levels not seen in decades, price cuts are becoming more aggressive by the week, and the investor enthusiasm that once defined Texas housing, it has all but disappeared. This video reveals the 10 worst cities to buy a home in Texas in 2025. These are markets where risk is accelerating, demand is drying up, and the so-called Texas dream could end up costing you far more than you ever imagined. This isn't just a mild correction, it's an unraveling that threatens to ripple across the entire state, and perhaps across the nation. Whether you're buying, selling, or just watching from the sidelines, what's happening here matters. And if you want to stay informed about these seismic shifts, make sure you subscribe. We track the markets others won't touch, and what's coming next will absolutely shock you. Let's begin. Kicking off our countdown at number 10, we start with Dallas, the economic crown jewel of North Texas. For years, Dallas represented relentless corporate relocations, booming job creation, and a seemingly unstoppable housing market. It was the poster child for the Texas growth story, attracting both families and investors who believed the good times would never end. But in 2025, the narrative is shifting, and Dallas is showing signs of vulnerability that few expected. Home prices are no longer climbing. In fact, they are slipping in multiple neighborhoods. Inventory has exploded across the metro area. Agents now report listings sitting for 60 to 120 days, sometimes even longer, often marked by multiple price cuts, $30,000, $50,000, and in some cases more, just to spark buyer interest. What was once an overheated marketplace has turned into a waiting game, with anxious sellers watching their properties languish. The once red-hot outer suburbs, once the frontier of suburban expansion, are now tragically oversupplied and overlooked. Remote workers who once poured in during the pandemic years have either paused their moves or chosen to relocate elsewhere. The enthusiasm that defined Dallas real estate has evaporated almost overnight. Confidence is thinning out, and conversations at open houses are no longer about how high prices will go, but how much further they might fall. Sellers are nervous. Buyers are sitting on the sidelines, betting on the next drop. Developers who once bragged about their endless pipelines are feeling the sting as projects take longer to move, and margins tighten. For those who believed Dallas would land softly, the reality is far harsher. This isn't a soft landing at all. This is a slow unraveling that could accelerate without warning. Dallas, once a leader outpacing the rest of the nation, now finds itself firmly in correction territory. Affordability is stretched to its limits, interest rates remain stubbornly high, and a cloud of economic uncertainty looms overhead. Recovery won't be quick. The Big D may still project a polished image on the surface, but in 2025, the cracks are widening, and the sound of strain is getting louder by the day. At number 9, we shift our attention to Corpus Christi, a city that at first glance looks like pure paradise. Postcard-perfect coastal views, glowing Gulf sunsets, and neighborhoods with homes just steps from the shore make it appear like the dream destination. For years, Corpus Christi was marketed as an affordable way to live by the ocean, attracting retirees, second home buyers, and even investors hoping to capture rental demand. But in 2025, that dream is slipping fast. Beneath the surface beauty, this city is facing a perfect storm of risks that make it one of the worst places to buy a home in Texas right now. The biggest culprit? Insurance. Following back-to-back tropical threats in recent seasons, flood insurance premiums have skyrocketed. What used to be manageable annual costs have ballooned to shocking levels. Some waterfront homeowners now face bills ranging from $5,000 to $7,000 per year, if they can even qualify for coverage at all. For many potential buyers, that single line item is enough to walk away. And unfortunately, those rising costs are just the beginning. Home values along the coast have already taken a sharp dip. Buyers are retreating, waiting for stability that hasn't come. The broader local economy isn't helping either. Beyond the port and refinery jobs, opportunities are scarce, and growth industries are limited. Young professionals who once brought fresh demand are leaving for inland cities like Austin and San Antonio, leaving behind an older, shrinking buyer pool. This demographic shift is draining demand further, making sales harder to close. And then there are the hidden costs of coastal living. Constant erosion eats away at land values. Humidity fuels mold and structural decay. Storm preparation is a yearly expense that never goes away. What seemed like a manageable maintenance budget quickly spirals into thousands of dollars annually. Investors who once saw Corpus as a safe rental bet are leaving quietly. Retirees who imagined peaceful beachside living are rethinking their plans. New development has slowed to a crawl, with builders hesitating to break ground in a market clouded by risk. Corpus Christi is still breathtakingly beautiful. Its charm is undeniable. But in 2025, that beauty comes with a price tag that's simply too heavy for many to bear. For buyers who aren't prepared for the hidden costs and rising insurance risks, this market is less a dream and more a financial undertow waiting to drag them under. At number 8, we turn to Lubbock, the college town set in the wide-open expanse of the Texas High Plains. Known for Texas Tech University, affordable homes, and those endless West Texas skies, Lubbock once carried the reputation of being a hidden gem for homebuyers. For years, it offered stability and affordability when larger metros overheated. But in 2025, that image is fading, and the city is quietly unraveling into one of the riskiest places to buy a home in Texas. Between 2021 and 2023, developers rushed in, expecting Lubbock to ride the same growth wave as bigger Texas markets. New subdivisions, duplexes, and starter homes appeared in rows across the outskirts of the city, built on the assumption that demand would pour in. But that demand never fully materialized. Instead, population growth stagnated, mortgage rates surged, and what was meant to be the next phase of expansion has turned into an oversupply problem that continues to deepen. Inventory is climbing. Homes are sitting longer. 90 days or more is becoming the norm. Price reductions are no longer seen as desperation, but as standard practice. Builders are scrambling to attract buyers by throwing in incentives, closing cost credits, free upgrades, even entire appliance packages, all in hopes of moving units. Yet beneath these tactics lies a larger problem: economic limits. Lubbock's economy depends heavily on education and healthcare. Outside of those sectors, job opportunities are thin. The industries driving other Texas markets, technology, logistics, finance, are nearly absent here. Without higher-paying jobs to support rising mortgage payments, many first-time buyers simply can't qualify. Rising monthly costs, fueled by higher interest rates and stagnant wages, are shutting them out. Investors who jumped in during the pandemic-era boom are struggling to break even. Appreciation has flatlined. Renters, too, are cautious, and yields that once looked attractive have diminished. Lubbock isn't crashing in a spectacular headline-grabbing way. It's drifting downward slowly but steadily. But for those looking for fast growth, strong appreciation, or reliable equity, this city has lost its promise. In 2025, the ground in Lubbock is shifting. What was once seen as affordable stability is giving way to a new reality: uncertainty, sluggish demand, and long-term risk. For many, the promise of the High Plains has turned into a test of patience and financial endurance. Landing at number 7, we focus on Frisco, a city once celebrated as the golden child of the Dallas-Fort Worth metroplex. Frisco symbolized luxury, top-tier schools, and an endless stream of demand from families and investors alike. In just 2 decades, it transformed from farmland into one of the fastest-growing cities in America, drawing in corporate headquarters, high-income households, and national attention. But in 2025, the shine is fading quickly. The city that once defined prosperity is now grappling with a brutal reversal. The symptoms are visible everywhere. Entire neighborhoods of newly built luxury homes are sitting eerily empty. What used to be a rare occurrence, price cuts, has now become a painful norm. Canceled contracts are piling up. Deals that once sparked bidding wars now collapse before closing. Builders, once confident enough to dictate terms, are now practically begging for offers. They're offering five-figure discounts, throwing in upgrades, and still struggling to find buyers. The once bustling luxury market has flatlined. Outer ring suburbs where developers rush to pour concrete are overexposed, unable to compete with the sheer volume of unsold homes. Behind Frisco's glittering facade, the cracks are widening. Infrastructure is under immense strain. Traffic congestion has hit all-time highs, overwhelming the city's road network. Schools, long one of Frisco's biggest selling points, are overflowing with students, stretching resources thin. Promised city services, from parks to utilities, are delayed, underfunded, or both. And the financial strain is just as glaring. HOA fees have crept up sharply, adding monthly pressure to homeowners. Property taxes, already among the highest in the state, are spiking even further. For families who once stretched their budgets to get into Frisco, these rising costs are a breaking point. Beneath the polished image, frustration is simmering. Investor properties are sitting vacant. Short-term rental returns, once lucrative, have all but vanished. Buyers who purchased during the frenzy of 2021 and 2022 are now underwater, watching their equity evaporate as comparable sales drag values down. The sense of invincibility that once surrounded Frisco has been shattered. On the surface, Frisco still looks polished. Gleaming schools, manicured parks, and luxury retail. But in 2025, those visuals mask a fragile market struggling to hold its balance. For anyone chasing appreciation, rental cash flow, or stability, the numbers in Frisco no longer add up. What was once Texas's brightest suburban star now risks becoming one of its most sobering cautionary tales. Moving to our number 6 spot, we arrive in Pasadena, Texas. Not the celebrity enclave of California, but the blue-collar suburb southeast of Houston. For decades, Pasadena carried a reputation for affordability, with the advantage of being close to the economic powerhouse of Houston. It was the kind of city where hardworking families could build equity without leaving the metro behind. But in 2025, Pasadena has become one of the riskiest markets in all of Texas housing. The reason can be summed up in a single word: flooding. Pasadena sits low, geographically, financially, and increasingly in buyer confidence. Large swaths of the city fall directly within FEMA-designated high-risk flood zones. After Hurricane Nicholas tested its already strained infrastructure, trust in this market hasn't fully recovered, and the risks aren't just hypothetical. Streets here regularly flood during moderate storms, exposing how outdated and overwhelmed the drainage systems have become. Climate concerns are only magnifying the problem. Insurance premiums, especially for flood coverage, are soaring. Some homeowners are now paying over $6,000 annually in flood insurance alone, costs that make home ownership unattainable for many first-time buyers. For families already stretching their budgets, that number is a deal breaker. Lenders are watching closely too, tightening requirements and sometimes declining loans outright in high-risk zones. The effects on the housing market are undeniable. Since mid-2024, home prices in Pasadena have fallen nearly 9%. Buyer interest has weakened, and those who might have once considered Pasadena as a stepping stone into Houston's broader market are backing away. Sellers face long waits and painful price cuts, while investors have already fled, shifting their money to safer ground in other suburbs. Even longtime residents are quietly reconsidering their options, weighing whether it's worth staying in a market increasingly defined by risk. What was once viewed as an affordable gateway into the Houston area is now looking more like a financial trap. Pasadena's story is sobering, a community that promised affordability but is now sinking under the weight of geography, climate exposure, and rising costs. In 2025, this city isn't just struggling, it's slipping. And for buyers who don't fully account for those risks, Pasadena could quickly become less a bargain and more a burden. Halting our countdown at number 5, we turn to McAllen, a city unlike any other in Texas. Situated near the southern border, McAllen has always been known for its cultural richness, its deep community ties, and most importantly, its reputation as one of the most affordable gateways into home ownership. For years, families and first-time buyers looked here for a chance to build a life without the crushing costs of larger metros. But in 2025, that image is unraveling, and McAllen is emerging as one of the riskiest housing markets in the state. The numbers tell a stark story. Since their 2023 peak, home values in McAllen have dropped more than 10%. But this isn't a mild correction. It's not just about prices dipping, it's a collapse in demand itself. Out-of-state investors who once poured money into McAllen have disappeared, leaving behind subdivisions that were built on speculation but never truly absorbed by local demand. Streets feel unfinished, entire sections of neighborhoods sit idle, and the optimism that once fueled expansion has drained away. Rental yields, which during the boom years looked attractive, have dried up. Investors who banked on steady cash flow are instead staring at vacancies. First-time buyers, who should have been the lifeblood of McAllen's growth, are finding it harder and harder to qualify for loans. Lenders, wary of a market showing cracks, are tightening credit standards. The local economy only deepens the challenge. Wages are stagnant, offering little cushion against rising mortgage payments. The region's weak healthcare infrastructure, combined with soaring utility costs and sweltering summers, adds additional strain. Families already stretched thin now face monthly bills that eat into any sense of affordability. For many, buying a home here feels less like a step up and more like a gamble with limited upside. Community life in McAllen remains strong, with cultural vibrancy and resilience that outsiders often underestimate. But when it comes to real estate, the story is very different. Stability, appreciation, and reliable resale value are fading. Investors who once saw opportunity now see risk, and buyers searching for security may instead find themselves trapped in a market with few exits. In 2025, McAllen stands as a painful reminder that affordability on paper doesn't always translate into a sound investment. Beneath the warmth of its culture lies a housing market that is cooling fast, illiquid, and unforgiving for those who step in unprepared. At number 4, we turn our focus to Fort Worth, the cowboy cousin of Dallas, long celebrated for its grit, culture, and steady growth. For years, Fort Worth thrived in the shadow of its flashier neighbor, benefiting from corporate relocations, booming suburbs, and a flood of new residents searching for space and affordability. It was marketed as the best of both worlds, big city opportunity with small town charm. But in 2025, the weight of that explosive growth is finally catching up, and the cracks are undeniable. Developers in Fort Worth went big, too big. Apartment complexes, sprawling master-planned suburbs, sleek condo towers. Entire swaths of the city were built on the expectation of endless demand. But that demand never kept pace with supply. Now, the market is flooded with listings, and the imbalance is glaring. The average days on market has doubled since 2022. Homes that once sold within a weekend now linger for months. Price cuts, once rare, are now routine. Investor appetite has cooled to near silence. Short-term rental profits, once a gold mine, have evaporated. Properties that used to bring in $2,500 a month are struggling to get booked at half that. Foreclosure filings are creeping upward, slowly but consistently, revealing a deeper layer of financial stress beneath the surface. Other concerns weigh heavily too. Certain zip codes are reporting rising crime rates, rattling buyer confidence. Property tax assessments, already a contentious issue across Texas, are adding to the uncertainty, leaving homeowners bracing for higher bills that strain already stretched budgets. For those who once saw Fort Worth as the safer, more stable alternative to Dallas, the shine is dimming fast. The city isn't collapsing outright, but it's teetering. It's trying to hold on to its identity while chasing a level of growth that may have outpaced its foundation. Buyers searching for stability and investors seeking predictable returns are now staring at risks they hadn't planned for. In 2025, Fort Worth is a city caught between ambition and reality. Its growth story isn't over, but the market is wobbling. And for those who step in expecting quick appreciation or easy rental income, the reality may prove far harsher than the myth. At number 3, we head west, far west, to El Paso, one of Texas's most unique and culturally rich cities. Perched where mountains meet desert and the border shapes daily life, El Paso has always stood apart from the state's other metros. It's a city defined by heritage, geography, and resilience. But in 2025, the housing market here is feeling immense pressure, and the warning signs are hard to ignore. Inventory has surged more than 60%, a staggering increase that has left homes sitting on the market far longer than sellers expected. Sales volumes have dropped sharply across nearly every neighborhood. Properties that once turned over quickly are now stagnating, waiting for buyers who seem fewer and farther between. Price reductions are piling up, and investor money is flowing elsewhere, to Austin suburbs, to smaller hill country towns, anywhere that feels safer than El Paso. The core problem is isolation. El Paso sits hundreds of miles from the state's major economic hubs. There is no easy pipeline to Dallas, Houston, or San Antonio. Growth here is slower, more fragile, and heavily dependent on a limited set of economic drivers: federal spending, the local military base, and cross-border trade. When any of these falters, the entire market feels the impact. Meanwhile, wages haven't kept pace with inflation. For many locals, affordability isn't measured by soaring home prices. It's the opposite. Homes are sitting idle not because they're unaffordable by state standards, but because incomes in El Paso simply haven't risen enough to support consistent demand. Construction, fueled by over-optimistic expectations, has outpaced reality, leaving supply far above what the market can truly absorb. The result is stagnation. Investors who hoped for rapid appreciation are walking away disappointed. Rental yields aren't what they once promised, and for first-time buyers hoping to build wealth through equity, the market feels stuck in neutral, offering little movement up or down. El Paso remains beautiful. Its culture is vibrant, its history deep, its landscapes unmatched. But in 2025, when it comes to real estate, the city feels out of sync with the rest of the state. What was once a hidden strength, its uniqueness and distance, has become its greatest vulnerability. For anyone seeking growth, liquidity, or fast returns, El Paso could leave them stranded in the desert, waiting for a turnaround that may be years away. At number 2, we confront the fall of a giant, Austin, Texas. Once hailed as the crown jewel of the Texas boom, Austin was the darling of the tech world, the migration magnet, the pandemic-era gold rush that seemed unstoppable. Between 2020 and 2022, the city felt untouchable. Homes were selling overnight, condo towers filled with young professionals, and investors from across the nation poured in, convinced that Austin was the safest bet in American real estate. But in 2025, that myth has cracked wide open, and the reality is far harsher. Home values have dropped by more than 15% in many zip codes, and the decline shows no sign of slowing. Condo towers that once glowed with lights at night now sit dark and empty. Luxury homes that once drew bidding wars now collect dust. Properties that sold for eye-watering prices just a few years ago are now discounted by 6 figures, and still, buyers hesitate. The unraveling has multiple causes. Tech layoffs have gutted demand. Google, Meta, and Oracle, companies that once anchored Austin's explosive growth, have trimmed staff, leaving ripple effects across the city's housing market. Downtown demand has collapsed. Commute-heavy suburbs like Leander and Kyle are losing steam, weighed down by longer drives and shrinking buyer pools. At the same time, rising property taxes and climbing insurance premiums are cutting deeply into affordability, forcing many families to reconsider whether they can afford to stay at all. Builders overshot spectacularly. Projects that looked like sure bets during the boom have now become liabilities. Oversupply is dragging down prices across the board. Investors, blindsided by the sudden turn, have been hit hard. Airbnb restrictions have crushed short-term rental profits, leaving owners with properties they can't fill. Interest rates remain high, freezing out first-time buyers, while longtime homeowners watch their equity vanish month after month. The city itself feels whiplash. Developers are canceling or pausing projects mid-construction, leaving half-built shells scattered across once busy neighborhoods. In East Austin, a hub of gentrification and flipping, the silence is striking. Streets that once buzzed with contractors and buyers are now quiet, with for sale signs standing longer and longer. Austin isn't just cooling, it's contracting. The city that once defined modern Texas growth has become a cautionary tale. In 2025, If you're buying in Austin, you better be doing it for the lifestyle, not the return on investment. Because the ROI, once the strongest in the nation, is evaporating in real time. Topping our list at number 1 is Houston, the largest city in Texas and, in 2025, the clearest symbol of the state's real estate collapse. For decades, Houston carried a reputation for resilience. Energy jobs, corporate relocations, and endless land to build on made it one of the most reliable housing markets in the nation. No matter what shocks hit the economy, Houston always seemed to bounce back. But this time, the story is different. Prices are officially down nearly 4% year over year, but that headline number doesn't capture the full scope of what's happening. Inventory has ballooned to levels the city hasn't seen in years. Listings are flooding the market, stretching buyers thin. The frenzy that once defined Houston housing, the bidding wars, the weekend sales, the investor buzz, has gone completely cold. The very strengths that once fueled Houston's meteoric rise are now dragging it down. Energy jobs, once the lifeblood of the city, are vulnerable to global volatility. Corporate hubs that promised endless expansion now feel overbuilt and underoccupied. Property taxes, among the highest in Texas, are crushing affordability. Insurance costs, particularly in flood-prone areas, have soared. These pressures have collided into what many describe as a perfect storm. And the storm is loud. Houston's sheer scale, once a source of confidence, has become a liability. When a market this massive begins to falter, it doesn't whisper, it roars. Real estate agents on the ground warn of a prolonged downturn. Some predict it could take years for Houston to recover. Others fear a deeper crash is still ahead, with distressed sales and foreclosures looming on the horizon. For sellers, the new reality means longer wait times and painful price cuts. For buyers, what looks like a bargain today could drop even lower tomorrow. And for investors, Houston has become a market where old playbooks no longer apply. The strategies that worked in 2020 are failing in 2025, leaving many scrambling for a new approach. Houston isn't just cooling, it's contracting. The same city that once embodied the promise of the new American dream is now the epicenter of Texas's housing crisis. Its fall is more than a local problem. It's a warning of what happens when growth runs unchecked, outpacing fundamentals until the foundation cracks beneath it. From Dallas's oversupplied suburbs to Houston's staggering collapse, one truth has become painfully clear. The Texas housing market of 2025 is not the one people believed in just a few short years ago. Prices are falling. Inventory is climbing. Confidence, once unshakable, is cracking across the board. What was once seen as the ultimate safe bet has turned into one of the most unpredictable and risky landscapes in the nation. For buyers, the message is simple but sobering. Proceed with extreme caution. What looks like a bargain today might not hold its value tomorrow. Waiting could mean the difference between building equity and being trapped in a depreciating asset. Sellers, too, face a new reality. Longer wait times, deeper price cuts, and fewer qualified buyers willing to commit. For investors, the strategies that worked during the pandemic-era boom are obsolete. Chasing appreciation or quick rental returns in these 10 cities is no longer a reliable plan. These aren't just local stories. They are early tremors of a statewide correction that's unfolding in real time. And make no mistake, not even Texas, with all its land, jobs, and promise, is immune to the forces reshaping real estate across the country. The same factors, high interest rates, rising costs, oversupply, and shifting demographics, are rippling outward, setting the stage for broader changes nationwide. If you want to stay ahead of these seismic shifts, now is the time to act. Don't just watch from the sidelines. Take in the data, rethink your strategies, and adapt before the market forces you to. Subscribe for more of our in-depth analyses, share this video with those who need to hear the warning, and keep your eyes open. Because sometimes the smartest move in real estate isn't about knowing where to buy, it's about knowing where not to buy.